Jamie, none of us saw this election outcome coming. The polls certainly didn't. What do you think is the reason behind David Cameron marching to the 10 Downing Street?
I think there was a few undecided voters, which, if you look at the surveys, they don't really factor in. And when they've actually gone to the ballot box themselves, and they were UKIP, let's just say hypothetically, they've then actually decided that if they vote for UKIP, because we weren't run a first past the post system, their vote is wasted. And UKIP actually won a lot of votes from the Tories, so they've gone back to their original stomping ground and voted Tories. And that's why we are seeing a narrow majority from the Conservative government.
Do you think this is a one-way street in terms of good news for the pound? Because there's this initial jubilation in terms of the sterling price.
I think the jubilations happen now. We failed to break the upside on cable at 155.70. We topped out at about 155.25. Looking what happens now, the Conservatives have still got a massive task on their hand. The deficit's still huge. I mean, it's the widest in the G10 at the moment. Moving forward from there is still some uncertainty regarding the European referendum, which they promised, and whether we could potentially see a Brexit. Now, that's not obviously going to happen straight away, but it is going to potentially isolate us from Europe. So there are still some question marks that sterling faces on the back of this election. The other thing to also take into consideration, they've only got a narrow majority, so passing through legislation still may be tricky, and that could weigh on sterling once the dust has settled. I think right now we have seen some jubilation, and we have seen sterling strengthen on the back of that, because what the markets were pricing in was a hung parliament and potentially a further referendum down the line and a bit of disaster. That hasn't actually happened. We've come out and we have got a majority, and it looks like that could actually upset the cart later on in the line.
I hate to be a cynic, when so many people, or the markets are at least happy with this result, it seems. We can also look at the fact we've got very low inflation here, which I know is low energy prices, but when you couple that with a government which is going to aggressively make cutbacks, that's not really a recipe for growth. And also, we've seen the rise of the S&P, which is maybe great for Scotland, but you could also potentially see a split in the way this country's run. There's two big risks there.
Moving forward, yes, there are obviously risks. I think actually the performance of the Tories within the election is actually probably detrimental to the S&P, because yes, they got 56 seats now in Parliament, but I think they were banking more on the Tories having a weaker say and maybe forming a coalition maybe with the Lib Dems again to try and undermine it, but because the Tories have got a majority, I think it maybe undermines the SNP's position a little bit. As far as energy costs go, and maybe increasing austerity, again, that isn't necessarily a recipe for growth. So there are some challenging times ahead for the UK.
Yeah, so let's compare the situation in the UK to Europe. Well, we've seen some encouraging PMI data this week. Do you think that those PMI figures that we're seeing in Europe are going to translate into real firm growth?
I think the effects of Draghi's unprecedented quantitative easing programme is starting to filter through to the markets. Again, without sounding cynical, when you're at rock bottom, it's very easy to bounce, and sentiment does improve very quickly. They have still got the Brexit weighing on investors' minds, and the EU meeting next week should actually bring that to light as well. My personal opinion, if you're looking at the performance of the euro at the moment, it's twofold. Firstly, you are seeing some positive data from the eurozone, and as a result, you are seeing sentiment improve. But let's not forget, we are seeing a weak performance from the US economy in recent weeks. Ever since the Easter non-farm payrolls figures came out particularly weak, that has come under more scrutiny, and as a result, people have been selling the dollars and buying back the euro, which has helped strengthen that currency as well.
Yeah, so just to finish off and talk about some specific levels for the pound in particular, how far do you think this rally will go? How high do you think the pound will reach against those key rates, the dollar and the euro?
I think the key levels that you want to look at against the dollar is 155.25, which was the high today. Beyond that, you may be looking at 155.70, which is the high that we've seen for 2015, and then there is going to be a bit of clear water. I still probably see support levels coming in at about 153.20 and then 152.80, so in and around the levels that we've seen. As far as sterling euro is concerned, we're still mid-range. We're kind of in no man's land. Support coming in at 135, topping out at that psychological level at 140, but currently we're in the middle of that at the moment.